What's up, guys? It's Ryan. It is Wednesday, and I'm so glad Neil comes back tomorrow night. I'm excited to have him back up here. Anyway, today we wanted to talk about, I'm always going to talk about credit. I'm going to talk about credit cards and credit utilization and credit factors that build your credit score, because so many people, they struggle with their credit. And credit prevents them from being able to buy a house. They have money saved, they make decent money, but they don't have a qualifying credit score. So let's talk about it again, and I want to talk about why credit cards are so important. 15% of your score comes from credit history. It's age of credit history, as I indicated over here. What that means is, how long have you had credit established with lenders or with a bank? A credit card is going to give you ever ongoing credit history as long as you keep the card open and you continue to make all your payments. It won't shut down, it won't close, it won't end. If you buy a car, if you have a student loan, even if you buy a house or if you have a personal loan, that has a definitive term that will end over the course of time. A credit card is going to have ongoing credit history. The other thing it's going to add to that is payment history. Payment history accounts for 35% of your score. The last component that credit cards offer that you have to have in order to get is revolving credit utilization. I summarized it here by saying utilization. You have to have credit utilization. What is credit utilization? How much credit do you have versus how much credit do you owe? If you have a $1,000 balance and you have a $1,000 credit limit and you have a $700 balance, you have a $1,000 credit limit, you owe $700 balance, that would put you at a 70% utilization mark. If you have $1,000 and you only owe $300, that would give you a 30% utilization. Guys, the most important thing you have to realize is this: 15% credit history, age of credit, 35% payment history, and 30% utilization. That accounts for 80% of your score. 80% of your score comes from these three things right here. If you learn to manage those, if you learn to perfect those, chances are you're going to have a much higher score. You do have to be disciplined. You have to realize, how much credit do I have? Okay, the magic number, I don't care what anybody tells you, the magic number is 9%. You do not want to go over 9%. If you go over 9%, you are going to lose points. You're not penalized, you lose points. When you hit 30% and higher, you actually get penalized for your credit score. So you have to keep that in mind. And people say, well, how do if I only have $500 credit limit, how do I do it? Pay it every 2 weeks. Go figure out a way. Don't use the credit card. Only put whatever 10% or less is on the card, and then go use your debit card. Or get a second card. I always recommend you want to have at least a minimum of 3 cards. People say, why? Couple reasons. Number one, you now have 3 times the monthly payments. That all adds to your payment history. You're going to have 3 times the credit limit. Now, the age of credit history, if you start them all at the same time, that will increase over the course of time by having all 3 of those. Because what happens is, if, let's say, 5 years down the road, you get another credit card, another account, that will lower your average age of credit history. But if right now, let's just say today, you get 3 cards, 5 years from now you get another account, another card, it's not going to impact your score as much because you've established this much credit history. It is that important for you guys to understand this. We should be taught this stuff in school. We should be taught this stuff as kids growing up. We should be taught this in some sort of manner that as a child we learn this is so important. Because right now the banks don't care about your story. They don't care that you went through a divorce. They don't care that somebody was sick. They don't care that you lost your job. You know what they care? They care about your 3-digit score. And that's it. Your 3-digit score determines what they're going to give you. They determine how much money you're going to get or what the factors are going to be. It's always a more favorable loan condition with a higher credit score. So guys, pay attention to this. Make sure you really take some time. Understand, how much credit do you have? How long have you had it? How much are you using? And do you pay on time? All right? I know this was a long-winded one. You guys know I always talk about credit because I'm obsessed with it, but it's only to benefit you guys. So I hope you found it helpful. If you have questions, let us know. If you liked it, share it. Neil, we can't wait to see you tomorrow. We love you guys, and we'll see you later.